previous video entitled, "Why is my house insured for so much?" we covered the pieces that go into making up the value of the house. But what if you don't want that amount? What if you want to select your own level of coverage? Is that something that you can do? By the end of this video, you will know the answer to that question and the reasons why. The insurance policy exists to insure the property to the extent that if it burned to the ground, that it could be rebuilt to the same relative size and style that it was prior. So a 2,400 square foot colonial would need to be rebuilt as a similar type style house around the same size square feet. See, most insurers will require you to insure the house to its full replacement value. This means that nothing can be depreciated after a loss. So let's say that you had a $350,000 house that was insured for that amount of money. Most of them are going to require you to insure to the full $350,000. However, some will allow you to drop up to 20% of the value off the insurable amount. So let's say you have a $350,000 house, they will allow you to insure it for as low as $280,000. Just be prepared, you will have less house rebuilt in its place in the event of a total loss. And there's a little bit more to that, which we'll get back to here in just a few moments. And you might even be thinking, Steve, that's okay. If the house burned to the ground, our kids are all gone, we don't need that much space anyway. If they want to rebuild us a 2-bedroom house in the place of this 4-bedroom colonial, we're totally fine with that. And that's something you would think the insurance company would be happy to get behind. They'd be on the hook for less money after the house burned down. You're happy with a smaller house. It's a win-win for everybody. Unfortunately, it doesn't work that way. See, only about 6% of insured homes even have a claim in the first place. And of that 6%, very, very, very few of them are because of a total and complete loss. This means that most of the claims are filed for much less than what the whole house is insured for. The premium on your policy is largely made up from the value that the insurance company puts on your house. If that amount were less, the insurance company would make less money. Yet any partial loss that occurred, you would still expect would be paid for in full. So take a roof, for example, that maybe suffered $10,000 worth of hail damage. Now, your expectation would be that the $10,000 roof be covered in full because you're insured for more than that. But that's a partial loss. And if the carrier is going to charge premium on a number that is less than the full replacement cost of the house, why would it be in their best interest to pay for the entire loss of a partial claim? That is why it is not a win-win for both sides. It is only a win for one. So let's take our 80% insurance to value example from a few moments ago. With inflation, it could cause your property to slip below that 80% in a very short period of time. There might not be anything in the policy to prevent that from happening, and now you could find yourself underinsured. And that would also mean that any partial losses would be covered no longer on a replacement cost basis, but on a depreciated cost basis. So what does that mean? Let's go back to our hail damaged roof from a little while ago. Now that you've slipped below the 80% of value on the entirety of your home, the insurance company could look at that $10,000 damaged roof and decide now it's time to depreciate the roof. So maybe the roof is 15 years old and it wasn't in the best shape. Regardless, they're going to depreciate it down. It could look very similar to maybe a check for $4,000 minus your $1,000 deductible, and then you're on the hook for the rest of the balance. There is a name for this kind of coverage, and it's called actual cash value, or ACV to us insurance nerds. So once the value of the home, the insured value, dips below 80%, full and partial losses will only be paid at their depreciated actual cash value. So after a full house fire, you would only be given a check for a fraction of what you expected. You now know the importance of insuring your home to its replacement value, or at least pretty close to it. But what if you have older items in your house, or your house is made up of some older items like an older roof, older furnace, older electrical, things like that? Be sure to check our video entitled, "What Things Could Prevent Me from Getting Homeowners Insurance?"